to get out here and share some of the FHA facts that I've been able to come up with throughout my career in lending. To be honest, I started off with my very first loan being an FHA loan many, many years ago. It was actually an FHA 203K, which we'll actually discuss in the latter part of this presentation. But one of the main reasons I think FHA loans are great is because of their flexibility and underwriting guidelines, and then also their minimum down payment. So I also will reference a lot of differences between an FHA loan and a conventional loan, just so you can kind of compare the two. So let's go ahead and jump in. Make sure I can do this here. All right, so as I mentioned, the first thing about the FHA loans that I prefer or I like is because of the low down payment. And that low down payment is 3.5%. Now there are options to do conventional at 3%, but that is typically going to be for your first time home buyer. For FHA, it does not require a first time home buyer to obtain the 3.5% down payment, and you do not have to be a first time home buyer to utilize the FHA financing. This 3.5% down payment can come by way of personal funds, whether that comes from your own savings, your own 401k. It can also come from gift funds from blood-related families. So that kind of dates all the way back to, or not dates, but that would be somebody as in, parents, your siblings. I've seen cousins get away. I have actually seen long-standing relationships, so friends from high school, but documenting that relationship is definitely something that's unique for FHA. Typically, it's going to be blood-related to provide the gift funds. And then, of course, for the down payment, you can also utilize down payment assistance. I see that we've got a question on here. Oh. Hi, Rob. No worries. Thanks for joining. Okay, so moving right along from a 3.5% down payment. The other news is that you can actually do an FHA loan down to 500, down to a 500 credit score. Now, not at the 3.5% down payment, but FHA will allow financing down to 500 FICO. You'll see here that the requirement is going to be for a 10% down payment. So a borrower with a 580 or higher can take advantage of the 3.5% down payment. A borrower between 500 to 575 or 579 would be required to put 10% down. But this is still this is actually new. It used to be 560, so they opened up that. To be very honest, in my whole career, I've done maybe one 560 credit score. It does require a lot of documentation to support the credit score being in the lower arena below the 580, but know that it is something that is able to be done as long as the buyer is putting 10% down. The main difference here in Clark County between an FHA loan and conventional financing is going to be the max loan amount. Every year, we've seen the loan limits actually change. For conforming loan limits, it actually went up this year from 484,350 to 510,400. For FHA, it went from I think it was 322,465 up to 345,000. So you'll see that. So that obviously is going to be the biggest difference between FHA financing and conventional financing. So as an example, if a borrower is looking at a home, that's 400,000. They want to utilize FHA financing. They still can. However, they would have to put down the amount, basically the difference between the 400,000 to 345,000. And then you'll see here as well for units more than for your 2 to 4 units, that loan amount will also increase. So if somebody is buying a multiplex, they could actually get a higher FHA loan amount. But the number one difference here would be for a conforming loan, you'd be at 510,400. For FHA with a minimum down payment, 345 as a loan amount, that really puts you into about 357 for a max sales price if the borrower is putting 3.5% down. All right, and then moving right along, it's a little bit smaller. The max seller contribution for FHA financing is 6%. Where conventional financing, if a borrower is putting the 3 or 5% down, the maximum seller contribution is going to be 3%. So I know in today's market, we're seeing a lot of seller contributions being provided. And so this has been one way that we've been able to maximize our borrowers getting in with little to no down or taking care of their closing costs is by maximizing the seller contribution here at 6%. And that actually includes any realtor or lender contribution as well. So that cap for that 6% is all inclusive, seller, realtor, and lender. Any questions at all? All right, moving right along. So mortgage insurance. One of the main differences between financing conventional and FHA is the mortgage insurance. And whereas for conventional financing, that mortgage insurance will fall off at some point once it approaches 80% or 20% equity position. For FHA, it will not. You'll see here that the monthly mortgage insurance is a lifetime, will be a lifetime payment for them. So the only way to remove that mortgage insurance is to refinance out. In addition to that, there's what we call an UFMIP. So you may see that somewhere in the disclosures or documents. That is the upfront mortgage insurance premium. And ultimately, that is typically financed into most of our mortgages. I don't know that I've seen very many of our clients pay that out of pocket. However, it is something that they can do. And ultimately, if you have a buyer that's putting 3.5% down, they will be financing 1.75%, which is their upfront mortgage insurance premium, back into the loan. And so a lot of times when a client is looking at the disclosure, it's going to show that the loan amount may not be that full 3.5% down. And that is because that upfront mortgage insurance premium is being factored in there. And again, that monthly mortgage insurance premium is going to be a factor based on whether they're putting 3.5%. If they put 5% down, it's actually a little bit lower of a mortgage payment, a mortgage insurance payment, but it is going to be a lifetime premium that they'll have to pay. Any questions at all about this? Condo financing. So for condo financing, I know we've shared a lot of the different condo for VA and conventional financing. I just pulled this up this morning. So as of today, there's 106 approved condos in Las Vegas, in Clark County, actually. And so I'll send you the information to get to this, but one of the best ways to do this, whether you're a buyer's agent or a listing agent on this, it is to double check to see if your community, if the home you're looking at is inside of one of these approved communities. And so it's easy for us to pull in. Let me see if I can get this share here for you. So can you guys see the HUD.gov?
Mm-hmm.
Okay, so in this HUD.gov, this is where you can actually pull in for the whole country actually, but for Nevada, we'll pull in the Nevada information here. I put in Clark County. And if you wanted it specific for zip codes, you could do that. I'm going to put in just the approved status, and I'm putting in both for a project as well as what has been submitted as for like spot approval type. And so this will pull up, and there's that 106, which we see here. There is also an option to do spot approvals. So spot approvals remind me very much like if you were to get a loan for conventional financing and you wanted to get one individual unit inside of a condominium project approved. It would require us to go through the same process that we would do for conventional loans. So we'll need that questionnaire. We'll need to get all of the HOA documentations like the resale packet, which would be the litigation, your bylaws, your CC&Rs, all of that information we actually gather together and would be submitting to HUD to get reviewed and approved just for that single unit. So condominiums in general, I always say, try to give us an extended time frame, usually about 45 days. But if a home is actually on this approved, FHA approved list and your borrower is utilizing FHA financing, we don't need anything else. We just need to get the insurance on the project, but we will not need an HOA questionnaire. So that wait time in getting that questionnaire is not going to be required. And truly, we can just move forward once we know, if we know that this condo project or this unit inside of that condo project is approved. So it's a pretty quick process. So if it is on the approved list, we can definitely get those done within that 30-day process. If it is something that we need to do like a single unit approval on, we would I would prepare for about a 45 to 60-day close of escrow on that. Any questions at all about condos for FHA? You guys are really quiet. All right, investment properties. So know that that seems to be, it's technically not acceptable for somebody to purchase as an investor. However, there is an opportunity if they're purchasing a multi-unit property. So a duplex, a triplex, or a fourplex, if they're going to occupy one of those units, the other 2, 3, or 1, 2, or 3 can be utilized as investments for them, and they can be rented out. And we will actually count any rental income towards their debt to income ratio as we utilize that for qualifying. So if you ever hear that an FHA, or that somebody's purchasing a home as FHA and it's an investment property, this is more than likely what they're doing. They're ultimately going to be purchasing a multiplex. Let me just make sure I'm on the right way back here. You guys see that? They will be purchasing a multi-unit property. And then again, as we look at the loan amounts for that, so your single unit, your single family is going to be $345,000 here in Clark County. And as you get up to 4 living units in there, or fourplex, the max loan amount would be $663,450 that a borrower could purchase a home, occupy one of the units as their primary residence, and the other 3 could be utilized for as a rental. And again, that loan amount goes up to $663,450. The 90-day flip rule, we actually recently came across this, and so I wanted to make sure we threw this out there. So the 90-day flip rule starts the day that the seller actually takes possession of the property. And so ultimately what this 90-day flip rule means is you cannot go into contract for an FHA borrower unless you're past the 90-day time frame that the seller has, or that the owner has owned that property. And truly, if it goes from an owner to an LLC and it's a different LLC that they are not party to, it counts as a transfer of title. If it goes into like a trust, that would be acceptable. Or if it was an LLC that, you know, some people are putting their homes into LLCs, but they were sole owners of that LLC, it'd be something that we could overcome. However, if they're putting it in this specific example, they actually were doing a reverse exchange, 1031 exchange. And so they had put their current home into an LLC and then put it up for sale. It was an FHA borrower who was looking to purchase the home. However, they had originally gone into contract prior to the 91st day. And so we basically had to wait and recontract on that 91st day to get that transaction closed. Any questions at all about the 90-day flip rule? Ready to go?
I'll know it forever.
Yeah, and just a little, yeah, it was Patty's transaction. She's the listing agent on the other side. And there are some exceptions. So if it's a bank owned, right, that happens to just go into foreclosure, that can actually be an exception so that the buyer going in with FHA financing does not have to wait. It is solely if it's really for those who are looking to flip the homes. They have to just make sure that they wait that time frame. Now, you can always put it up for conventional or VA financing because they do not have a flip rule, but you would just have to wait to add FHA as one of the financing considered once it approaches the 91 day. So if we were to look at a contract today, if a seller closes on that home today, I just wanted to throw this out there. Seller closes on a home today, you're about ready to list it. Just know that November 4th would be the first day that you can accept an FHA borrower or contract on that property. Again, you can take a conventional or VA borrower anytime after you list it, but for specific to FHA, you do have to wait that 90-day time frame. And so the 91st day is when we would pull the FHA case number and when the contract can actually be accepted. And that date based on today would be November 4th. All right, just to talk a little bit about some of the niche loans that the FHA has. The first one is our 203 renovation loan. And so home improvement loan, because this can actually even be done for refinances as well. The K part of it means it's basically for the renovation. It can be a streamline, which I'm going to discuss on the next slide, or a full-blown renovation, which is literally foundation up. And there's no caps as far as that other than your max loan amount. But going into our streamlined renovation loan, a borrower can pick up to $35,000. It's really 33 because we have contingencies in there for just in case they happen to go over. But $35,000 can be added on to their financing for options. And these are primarily going to be more cosmetic improvements, not structural, right? So it could be, imagine you have a client that's walking into a home and the home clearly needs new carpet, needs maybe updated countertops and maybe some cabinets. Even if there's some things like the water heater would need to be repaired, or maybe there's some glass that needs to be fixed in the property, or they want to upgrade the windows to more of a low or energy efficient windows. They can do all of that with the improvements. They can't, however, go in and rebuild, put an extra pony wall, add a pool, things like that. It is specifically for more of the cosmetic improvements within the home. But I know in our market today, right, there's a lot of, it's a tough market as far as that a price point between below 345. And so some of the homes that I'm hearing from borrowers are needing to get updated, maybe even just to get updated to the modern style homes. And so they can utilize an FHA renovation loan to take advantage of updating or upgrading that property. And as far as the appraisal is concerned, we actually look at the appraised value based on 110% of that appraised value. So knowing that if for some reason the home may not appraise based off of that, we can go up to 110% of the after improved price. So that's actually an added benefit with the 203K. The down payment and FICO requirement are exactly the same. However, some lenders have a higher FICO requirement. So what I'm seeing kind of across the board for most lenders is that they want a 620 minimum FICO, even though FHA will allow 580 for 3.5% down. And one of the great benefits for you as an agent is this is paid out just like a normal transaction. So I would give or take about 45 days for close of escrow, simply because the borrower has to go in and obtain these bids for the $35,000, right? And so once they get that information selected, they get the option selected, they give that information to us, and then we go to order the appraisal. We need to have all of the appropriate options or upgrades that they're going to do in order for us to include that in our appraisal order. So considering a borrower could take a couple weeks just to finalize that number, that's that 2-week period that I would say to add on top of a close of escrow. But outside of that, the closing occurs, and then you've got about 6 months to, the borrower has 6 months to complete those repairs, and the borrower truly works with the lender at that point to ensure the escrow payout is done on time for any of the vendors. But for you, as far as the transaction and sale is concerned, that closing on the 45th day or whatever the normal closing time would be is when you'd actually get paid out on your commission. So that's a great thing for you guys as realtors. And again, just adding in there, just to be prepared for the extended closing, just to make sure that you have time, not for the repairs, but really for the bids for the improvements. Any questions at all about the 203K? All right. Reverse mortgage purchases. So this is, there's been a lot of talk around reverse mortgages just in general, and typically those were done as refinances before in the past. However, this is actually an option for somebody to purchase a home. One of the downsides is that they do have to put a larger down payment, but ultimately what happens is that borrower does not have to pay principal and interest any longer on that property. They do have to maintain the taxes and they do have to maintain the homeowner's insurance, but there is no mortgage payment. So, you know, Patty, we were talking about your client. This could actually be a good option for her. I have an example up here. So as long as the client is over 62 years old, and that would be the eligible borrower. Now, let's just say this eligible borrower is a cougar and she's married a much younger spouse. It is okay. We'll qualify off of that person. And so looking at that cougar example, I took my birth date and made this as though I were 74 years old today. And we're looking to purchase a home. This is based on a $300,000 sales price home. And so you'll see here, that 187,000 would be required for the down payment, and then 112 would be what we would consider to be financeable. However, we would not have to make that mortgage payment at all. The only thing that we'd have responsibility towards would be just our property taxes and homeowners insurance. And so for a borrower who is maybe on fixed income, like retirement or annuity or Social Security, this could be a great opportunity where they're not having to really worry about a mortgage payment. They do just keep up with the mortgage, the property taxes and homeowners insurance, but that could be like nominal compared to a full mortgage payment. So consider this if you have somebody who's looking to put a lot of money down and perhaps doesn't have a ton to qualify off of, because this really is based off of their age, their credit. They still do have to have a 620 minimum credit score, and then the equity position that they're going to, and their down payment that they can put down. One question that I always have is, what happens to the property in the event that that person, the eligible borrower, passes away? And so typically what will happen is the bank, it doesn't go right to the bank. The heirs or the heirs basically have rights to the property so that they can either sell, they could refinance to purchase the home or to take over the home, but they do have basically the right of first right of refusal in order to take ownership of that property. And all that that FHA is looking for is that loan, so in this particular case is $112,000, is paid off. They're not looking for any equity position on it at all. So it's a great opportunity for those of our clients who are over 62 years old. This amount also is a sliding scale dependent upon their age. So if you have any questions about that, let me know. But that concludes my fun facts for FHA. You guys were really, really quiet today. Do you guys have any questions at all?
Yes, I do. About the reverse mortgage.
Yes.
So is that the scenario? So they for the 62%, that is what they already paid off on the home?
No, so that is basically,
yeah.
So that's showing you, so a 74-year-old who's purchasing the home, that's how
Okay.
much the equity position is. They'd have to put down about 62% of the home with what they could borrow, and then they have no mortgage. Whereas if you were to put that down payment amount of $187,000, right, you'd still have a mortgage payment because you'd have a loan, you'd have principal and interest payment. In this particular case, they would not have the principal and interest payment. They would just have to take care of their taxes and insurance.
So it's like a big discount.
It's huge. I mean, it's ultimately them paying in, right? And then the thought is at some point as they pass, there's going to be equity, so the home could be paid off at some point. But this definitely gives them an opportunity for them to purchase the home without having to make those monthly payments every month.
Exactly. So let me just get this clear one more time.
Yeah.
So if a 62-year-old or up, if they're buying a home, and it could be, the FHA amount, so $330,000, and they're financing it, and let's just say $300,000, they just have to put down, and is this all cash, or could they get that financed?
Yeah, well, it cannot be financed, but it can come from the same sources as a traditional down payment. There's no down payment assistance for it, but it could still be from like a 401k, retirement accounts.
Okay.
It could come from gift funds from family, some way, you know what I mean? But it just
funds.
Yeah.
Okay.
And keep in mind, Asia, this number would change based on the client's age. So it'd be something that we'd run.
Oh, really?
Yeah, the down payment amount. Yeah. So there's a factor that we use based on their age.
Will that go up or lower based on the age going higher?
It is lower based on the age, or higher based on the age, because they have less time to pay it off, to live in the home.
Okay.
You know what I mean?
Okay, I gotcha. All right, well, this is cool. Very cool.
Awesome. I'm glad you like that. Anybody else? Any other questions?
Hey, Shirley, I found a microphone. I couldn't go a whole Zoom meeting without saying something, right?
How are you, Rob?
Good, how are you?
Nice
Hey,
to
question.
see you. Yeah.
Putting in a lot of offers, and especially from the big banks now. Are you seeing with you guys, it's taken a long time? I try to direct them over, but sometimes they have their own lender, and I'm seeing like more than 30 days they're asking for in order to close. Is that because they're so busy now, or coronavirus, or are you seeing that?
So for our purchases, I mentioned on our sales meeting, so we are prioritizing our purchases. We're still getting them done in a 30-day time frame. I'm hearing though from other lenders that they're blaming it on COVID. I mean, the reality of it is for COVID for us and our team, we put all of our team, they're living from home. They're working from home. So they're working remotely, and it's actually helped to make them a lot more productive. But I believe the biggest issue is capacity, and that, you know, it's really hard to run when the way to think about this is there's $10 trillion of refinance opportunity, and capacity wise nationwide, probably 3 trillion. Like our lenders are able to only really push through $3 trillion in 1 year, this year, without trying to hire some new people. Now, granted, we probably, with all the unemployment, we probably could go out and hire a lot of new people, but to answer your question, I believe it's because of the capacity of the refinance. For us at Prosperity Lending, I would say we are definitely keeping them within that 30-day time frame. If you need, you know, expedited appraisal or whatever, you just need to communicate that early on. And I'm noticing for us as well, our rates have been smoking the other lenders. So if you need to entice them with something, let them know that, you know, give us a second or give us a shot to see what we can do to even beat the rates. Because one thing that other lenders are doing today as well, they're increasing their interest rates to kind of slow down the capacity, right? So that not as many people are coming in to do refinances or purchases. But for us, we've kept them low, and we've just we've worked to maintain our turn times. We've pushed our refinances out. So we were closing them in 30 days. We're probably about 45 days out on our refinances, but we're nowhere near the big banks. The big banks are like 3 months to 6 months.
Wow. Okay. Awesome. Thanks.
Did that answer your question?
Yeah, for sure. I think, like you said, I think it's a little bit of they're working from home and they're kind of not supervised and they're too busy for themselves. Like, so I think that's probably another excuse, but yeah, I get it.
Yeah. So like I said, if you do have a client that is entertaining the big banks, just give one of us a shot just to even, and I would just explain it like, hey, you could always just get a rate quote. That's it. And then, you know, allow us the opportunity to try to let them know that we can also close them faster. But I'm pretty confident that we can also beat their rates today. So
okay.
I appreciate
And does
it.
the down payment assistance, I had one of those, does the down payment assistance take longer of a process?
Same, it still goes for, well, I take that back. So the culinary side, it gets the second review by Neighborhood Housing Services or Nevada Partners. So that would be a separate approval process. But for us, if it's home as possible, if it's home at last, that is directly through our underwriting. There's no timeline on that.
Yeah, they needed like a second, I forget, but they needed like a second. They didn't have the 3.5% to put down. So they were like getting a second somehow to pay the down payment.
That's probably from the home as possible. Yeah, so for us, it's the same process, no difference. They do have to take the class, but outside of that, that's like a 30-minute class they do online. So it's pretty easy.
Okay.
No real delay.
Thanks, appreciate it.
Yeah, of course, my pleasure. Any other questions?
Yes, I have a question. So for the reverse mortgage, is it just for FHA?
It is. It is just an FHA program. You may see it out there called HECM, and that's home equity credit mortgage. So yeah, it's basically because it is technically like a line of credit. It's ultimately financing, and it repays itself back.
Okay.
Yeah, but it is just an FHA type program.
Okay.
I see your wheels are spinning.
Primary residence too?
It is primary. Yeah, everything for FHA is primary residence.
For sure. All right. And then my last question is the 203K, is it complicated?
Complicated. So the main difference is going to be for the borrower, right? Is they do have to get all of their improvements in. It's different just for us as a lender because it's almost like us having options and such that we have to add into it, but it shouldn't be any more complicated for you as a realtor. It's just time frame wise, it is a little bit longer of a process because your borrower has to go and, you know, pick the options. And I mean, if you've had anybody that's gone through new construction before, like they could go in one day and think they want this, and then they go home and they're like, oh, I actually want this. And so then they go back to make changes. So that process I've seen takes about 2 weeks to get their actual bids back. but it's not more complicated. FHA guidelines and everything are the same.
So bids with the city, it's like getting the permits approved?
Well, it's not structural. So if you're looking at a full-blown renovation, that is different. That is a little bit more, that probably will take you more like a 3-month closing. But your streamline, which is a 35,000, should really just be like cosmetic
Like
type
kitchen
stuff.
cabinets?
Yeah, but you won't need
Counters.
permits for that. You don't need permits for kitchen counters. And
Okay, okay, so
stuff.
cosmetics, okay, I got you. It's
Yeah.
for the cosmetics, okay.
Yeah.
All right, so yeah, so an extra 2 weeks, you think, to close?
Yep. Yeah,
Okay.
but I think in today's market right now, right, where there's such a bidding war that if a borrower is like, so wishy-washy on closing, maybe opening their eyes to say, hey, this program is available for us, it would be something that you could look at, maybe making this home exactly the way that you want it. Could you do this, 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 and this, as long as it's within that 35,000 price range and they can qualify for it, then the 203K is a great loan for them.
And the 30 years too, fixed?
It's a 30-year, yep.
Okay. All right, cool, thank you.
My pleasure. Any other questions? All right, well, I want to thank you guys all for joining my presentation. If you have any questions, you know where to reach me. Our whole team is here to help you out. Again, this will also be recorded and then we'll send out, it'll be uploaded into the Signature YouTube channel. And then I'll also send out some of the attachments along with that once it's actually dropped, and then the PDF can be sent over as well. But I appreciate you guys taking the time with me today. And if there's anything I can do to help you, please feel free to reach out to me at any time.
Thank you, Shelley.
Thank you.
Yeah,
Take care
thank
and stay
you.
safe.
You too.
All right, you too.